So you've got a full-time job and you can't watch the market all day and you're trying to become a consistent options trader. And you're thinking to yourself, how am I going to do this? Because options trading can seem like a full-time job in and of itself, right? Constantly watching market trends, wondering if the Fed is going to tank your trade or not, managing existing trades. It can definitely seem overwhelming. But let's hit the brakes on that mindset real quick. It doesn't have to be this way. Picture this instead. Trading without the stress, without the constant screen watching, all while you're crushing it at your 9-to-5 job. Sounds too good to be true? Well, that's where you're wrong. The secret sauce is planning. I'm talking about going into your week with a game plan, ready to roll. No more shooting from the hip. And that's where alphacrunching.com comes in. Alpha Crunching is delivering detailed weekly forecasts that'll help you plan your trades in advance. That means less stress, more peace of mind, and yeah, you can actually get your work done. Now let's dive in. All right, so let's dive in to see how we can plan our trades before the trading week begins. And we're going to be using the weekly forecast from alphacrunching.com to help plan those trades so you can focus on your full-time job and not have to watch the market all day. Now, if you've been to this channel before or you've seen Alpha Crunching forecast before, we probably focused on the daily chart, which is best for 0 DTE. And I've got a bunch of videos on the channel about that if you want to check those out. But we're really focused on the weekly chart. And what this is going to do is to allow us to plan our trades and pick a couple times during the week where we could put on a 1, 2, 3, or 4 day spread. This is not going to be 0 DTE. So what we're going to do is walk through the forecast, and I've got the week of April 24th up. I'm logged into alphacrunching.com, and we can see this chart. And it's very simple. It's a very simple algorithm that's spitting out a chart. And what we're going to be doing is using the forecast chart to pick and pinpoint certain types of trades that we could look to put on during the week. So let's walk through the chart so you can kind of understand what it's telling us, and then we'll go through a bunch of examples here. So I'm logged into alphacrunching.com, and I have the weekly chart on, and I've chosen the week of April 24th. And the first thing we need to know is that when you choose this week, this is available at least 1 or 2 days before the week starts. So this chart would have been available on April 23rd, maybe even the 22nd. It's usually updated every weekend, Saturday or Sunday. So by Sunday night, you're ready to go with your forecast. And we can see that the forecast tends to be a little bit bullish this week. And let's talk about what we're looking at though. So on the bottom axis, we have the time of day and day of week. So in this case, we're starting at 9:30 a.m. and on Monday, and we are going to 4 p.m. on Friday all the way across the week. This is in Eastern time. And the other axis, we're looking at the average number of SPX points. Now we're using a time series forecast mechanism or algorithm to come up with these price movements. And another word we can use for this is intraday seasonality. And over the course of the last several weeks, the algorithm has put together this forecast, which is basically telling us we're in sort of a bullish mode. So we could look for potential long trades early in the week with the idea that the market should be drifting higher to end the week. And then after the data is updated for the following week, we can simply go to choose a week, and we're going to be looking at some trades for the month of May. And what you'll notice is when I bring this up, the pattern actually changes. So each week as the data is updated, the pattern tends to change. However, in May, and you'll see this in a second, May, the pattern actually was very persistent, and we were able to book several trades of similar kind. And we're gonna go through those real quick. So in this case, for May 1st, this chart was available at the end of April, right before May 1st. So you have this before the trading week begins. And we see as the week starts out, Monday's a little bit choppy, it ends kind of bullish, but what we're seeing is a kind of a swoosh down, I like to call it a swoosh down, from Monday afternoon or Tuesday morning through Wednesday afternoon. So at this point, we can go into the week saying, hey, maybe Monday afternoon or Tuesday morning, I want to look at potential short trades. So if you're already using a trading system like a moving average crossover or whatever technical analysis you use, you can look to say, okay, I'm going to put on some short trades during that time, maybe use chart confirmation. So this is really meant to enhance whatever system you're already using. The way I like to trade these is with credit spreads because they're a little bit more forgiving. So we could look to put on a call credit spread, maybe slightly out of the money, either Monday afternoon or Tuesday morning. and with maybe 2 or 3 days to expiration. Because remember, SPX has 5 days of expiration. So we can really be flexible in the strikes and the days and times that we're choosing. Now, this chart isn't going to give you levels like a regular chart would. There's no price levels. It's simply telling you when to expect a certain movement up or down. So we're looking for these extended movements like this one, like Monday afternoon through, we'll call this Wednesday afternoon. And then there's a different pattern where Wednesday afternoon up until Friday tends to be a little bit more bullish. So this is going to allow us to potentially put on 2 trades, maybe sell some call spreads Monday or Tuesday, try to take those profits, and then sell put spreads that expire into Friday. So this particular week, we could potentially put on 2 trades, whereas the previous week was April 24th, where this was tended to be just a bullish week. So you could look to just buy dips or pull back. So each week can be a little bit different, but we're able to plan those trades. So let's go to the second week of May and see what the pattern looks like. And this is the week of May 8th. So on May 7th, this chart is available, and we can see the pattern's a little bit different from the previous one, but it's actually kind of the same too. We're expecting some bearishness from Monday into Wednesday, and then maybe a bounce to the end of the week. So we're seeing early week weakness and midweek to end of week strength. So if we take a look at the next week, we see a similar pattern. Again, the pattern is shifting, but still kind of a bearish movement for the first part of the week and maybe a bounce up towards the end of the week. And we're going to show you how you can trade this in a second. And then we're going to look at this week. I'm doing this video on Thursday, the 24th. If you NVIDIA, this pattern is playing out beautiful. NVIDIA just reported earnings, so the market is rallying. So this Thursday to Friday is actually looks like it's going to play out. And we actually took a trade Monday on this pattern, and it profited as well. Same thing. We're looking for a pullback early in the week and then a bounce towards the end of the week. I wanted to show you how you could trade those. So what I did was I went into Option Omega, and we're going to start with the early week trade. This is a call credit spread backtest, and I have the dates in there already. I kind of set it up to save time on the video. But basically, I said, okay, let's go back over the month of May, and we're going to sell a call credit spread at 3:45 p.m. on Monday. Just trade one contract for the sake of the backtest. We're going to sell slightly out of the money with 3 days to expiration, and we're going to take profits at 50%. So over the past month, the last 4 weeks, this has been a profitable trade, 100% win rate. We made about $465 trading just one spread at a time. Again, we simply looked at the chart. Let's go back in here. We look here and say, okay, the end of the Monday is kind of bearish. We sell that call credit spread here and look to take profits on the swoosh down. And again, that's been profitable the last 4 weeks. And then if we look at the next back test, which is a put credit spread, and this time we are selling a put credit spread Thursday morning, shortly after open. We're going to do 9:45 a.m., 1 day to expiration. So Thursday morning and a bounce into Friday. And we can see that over the last 3 weeks because the week isn't over yet. This has been a 100% win rate as well. Again, we just sold a slightly out of the money put credit spread with 1 day to expiration on Thursday at 9:45, and this has been a profitable trade for the entire month. So between these two strategies, we could have pulled off 7 or 8 winning trades based on, for the month of May, based on this similar pattern. Now, next week, the pattern may be totally different, which is why it updates every weekend, but you're able to look at this on Sunday night and say, okay, what are some optimal times for me to take trades? And that's how we're doing it with the weekly chart from alphacrunching.com. Let me know if you have any questions in the comments, and I'll see you in the next video.